All right, traders, we are looking at the Wyckoff Wave for oil. It's present, and this Wyckoff Wave for oil is made up of a few holdings that are here. And I'm not sure as far as what relationship or which weight that they have on the Wyckoff Wave, which is highlighted here in black. But nonetheless, this is what makes up the Wyckoff Wave. And we can see here when we compare the holdings that the majority of the index is actually underperforming the wave. And those that are currently showing some relative strength are threatening to become underperformers as well, which is putting some negative pressure on the market. So I don't see anything here that presents kind of a buying opportunity, other than the fact that if I'm looking for something to buy when oil begins to recover, I want to buy the ones that are showing relative strength. So if we're looking at that, we're looking at PSX, and then we're additionally looking at, let's see here, probably XOM, so ExxonMobil. Otherwise, the rest of these, they may provide some good buying opportunities at lows, but they're not showing any relative strength. So back up to the Wyckoff Wave for oil and some of the indicators that we have here with Wyckoff SMI. This is something that's owned by Todd Butterfield. So the indicators that we have is the optimism pessimism index, the force index, and technometer. The optimism pessimism index essentially measures market volume that's present. So we can appreciate that although the Wyckoff Wave made a new low, there was really no increase in volume that was present. So I'm just going to say that's pretty neutral. I will say that this is we have a bearish trend that's present. So it is in harmony with the actual price action of the Wyckoff Wave for oil. The force index we can appreciate is higher. So it looks like we have a bullish divergence that's present. The force index specifically is an indicator of investor sentiment that's present. So it measures market pressure. So something that's interesting is that the Wyckoff Wave for oil actually broke down and the force index is bullish. Or I mean, you can appreciate that it's giving us a negative pressure, but actually the upward force of pressure on the industry here was actually bullish. So if this was actually neutral or flat, we would have seen some pretty aggressive downward price discovery, even more so than we already saw last week. And then the technometer here, the technometer is an oscillator, and I'm going to say it's a bounded oscillator because it's bounded by the low reading being 0 and high being 100. Now, generally an overbought technometer is around 50 to 53, where an oversold technometer is around 38. So we can appreciate that we're in the higher range of the accepted norms for the Wyckoff Wave oil wave that's here. I apologize. So what this means is that this is actually kind of a unique setup because what happens is that both of these potentially being incorrect, if these turn down, if the force turns negative and the technometer also turns negative, the Wyckoff Wave for oil may grossly break down. So this is kind of a unique circumstances, which is why I want to highlight this. And we'll continue to follow this next week and the following week, as I'm very curious to see where Wyckoff Wave for oil goes, in addition to crude. But I want to see how the force and technometer respond to that. So I think that this is actually setting up for a pretty bearish breakdown is what I'm saying.